Mastering the language of central banking. Hello, English language learners. Today, we're diving into the fascinating world of banking and finance, specifically central banks. As we proceed, you'll become familiar with some of the crucial business and finance vocabulary related to central banks. These terms are widely used in professional discussions, academic texts, and the media. So, are you ready? Let's get started. Central bank is an institution that manages a state's currency, money supply, and interest rates. Countries have one central bank, such as the Federal Reserve in the United States, the European Central Bank in the Eurozone, or the Bank of England in the UK. Central banks are pivotal for the country's economic stability. The central bank's primary function is to control the nation's money supply, a term known as monetary policy. It can influence the economy by controlling interest rates and the amount of money circulating in the market. Let's now explore some key terms associated with the operation of central banks. 1. Interest rates. The proportion of a loan that is charged as interest to the borrower, typically expressed as an annual percentage of the loan outstanding. 2. Inflation. The rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. 3. Quantitative easing, QE, an unconventional form of monetary policy where a central bank creates new money electronically to buy financial assets, like government bonds. This process aims to directly increase private sector spending in the economy and return inflation to target. 4. Reserve requirement. The amount of funds a bank holds in reserve against specified deposit liabilities. Central banks often use reserve requirements to control money supply in the economy. How does a central bank operate in real-life situations? Suppose there's a risk of inflation. The central bank may increase interest rates to control spending and slow down the economy. If the economy is sluggish, the central bank might lower interest rates to encourage borrowing and investment, injecting more money into the economy, a process known as a stimulus. Another important term is financial regulation, where the central bank sets rules for other banks to ensure they are safe and sound. They also act as a lender of last resort, providing banks with loans when they cannot find other sources of funding. Congratulations! You've now boosted your English language skills by learning some key business and finance vocabulary related to central banks. Remember, these words and phrases are not just academic, they are used in everyday professional discussions and in the media. Keep practicing these words in context to ensure they become a natural part of your English vocabulary. Thank you for joining us in this lesson. Keep exploring, keep learning, and see you in our next video.